Okay, so now we are being recorded, and I've got the last problem in chapter 9 that I want to go over, and then I'll quickly scan over the other ones that I skipped over for you to do to try on your own. I'm going to make this screen a little bit smaller so I can get both of these side by side. If you have questions during the process, either stop me on voice or in chat, and we'll go ahead and discuss them. So we're looking at a typical cash flow statement here on the left. And there's some questions that are on the right. Now I've typed in sort of the basic rules. And what the rules are is when you're doing an indirect cash flow, or if you're thinking about how changes in in operating assets and operating liabilities affect cash, we make assumptions about how they work. So if an operating asset increases period over period, then we assume that it's due to spending cash or not receiving cash. So it's a use, therefore it reduces cash collections or cash outflow. If an operating asset decreases period over period, then we assume it was because we received cash or were able to save cash. And so this is an in. It increases the expectation or the getting of cash for that particular accounting cycle. So what does that mean? Let's jump to number 3, and then we'll come back to number 1 and 2 in a second. This is given sales were 73,904 million, and the changes to accounts receivable and deferred revenue above cash collected from customers must have been. So we have 2 other accounts, and what we see here is that these are both increases. Now, I want you to type in chat what type of account is receivables. Got a few answers, give you another few seconds. Okay, so receivables is a current asset. So asset or current asset would have been correct. Now I'd like you to type in the chat what type of account is deferred revenue. Good. Okay, most of you had it correct. It is a current liability. And if you'll notice, it's in the operating section. So anything in the operating section is going to be current assets or current liabilities. And you can see here, this says increase, and yet it reduces the net earnings. This says increase, and it increases the net earnings. So one of the ways you can tell is that when you're looking at the statement, it has the non-cash expenses, then it has current assets and current liabilities related to operations. So we know that they're current assets or current liabilities. Now it's important that when we look at the changes year over year, we understand how they affect it. So this one relates to the first one. And the increase in deferred revenue relates to the third one. So the way this works is we take the 73,904 as starting with our cash. We'd subtract the 266 and we'd add the 263 and we'd end up with 73,901. Okay. Any questions there? All right, now this says the statement of cash flows has been prepared using the direct or indirect method. So this one starts with net earnings, which is similar to net income. And whenever they start with net earnings or net income, it is using the indirect method. Which activity section is affected by the use of direct versus indirect method? The only section that is affected is the operating. All right. Now I'm going to ask for your participation for number 4. Did cash increase or decrease during the year? Good. Most of you were able to get it and get it right away, so that's great. We look here at the statement, and that's the change in cash. And that 630 is made up of the net change in cash in financing activities, the net change in investing activities, and the net cash provided by operating activities. So it decreased. And that's the 6,904 plus a negative 4,479 plus a negative 30. And that equals net of 630. Okay. All right, so that's good. All right. Now, number 5 says, given the change in cash for the year, what do you expect, or do you expect the company to have financial difficulties in the near future? Why or why not? So I'd like you to put in there yes or no if you expect them to have difficulties. No if you do not expect them to have difficulties. And if you have a reason, you can put the reason in there as well. Okay. So several people answered, and there was a mixture of answers. And one person hit it right on the head. With this case, we don't expect them to have difficulties. And the reason why, or why not, is that their operating cash flows are good. I used the word strong in the last class, and then people were like, oh, how do you know if it's strong or good or great? And the thing is that it's really hard to say something is good or great because that's kind of an opinion. I use the word strong because they had more cash provided by their operating activities than they had for net income. So that's pretty good. And this is expected to be fairly persistent. Means year over year, we expect the company to do that. And we say, well, what really brought them down? So we had capital expenditures, which kind of brought the cash down. And then we had repurchase of common stock. Now, note here, I didn't highlight these two because they offset each other. And basically, companies that have cash available, they're investing it in short-term assets and then selling those short-term assets when they need cash. And they're doing it kind of on a daily to weekly basis. So a lot of times you'll see these investments essentially kind of work themselves out, and it gives the company a little bit more of a return than just keeping your money in a bank account. And then the other kind of big expenditure here is an acquisition, so cash payment for acquisition. So if you look, their operating cash flows are good and they're investing in growing the business. Stock buybacks can be halted at any time. All right, I got a question here. I'm going to take a look at it. So somebody said long-term, if investing activities are high, wouldn't that cause the company to have financial difficulties now? Not necessarily. A lot of that depends on how they're financing the investment. And in this case, if we look at debt, there's not too much debt going on relative to what they're what they're doing. It looks like they're using cash to pay for these acquisitions. So even if the capital expenditures in the business that they acquired don't produce income quickly, they should be okay in the short term. That's a good question, though. If they were financing it with debt, I would think that there could be a risk short term. And we're seeing something like that now. Companies that have used debt to finance their growth, expecting kind of an immediate return on their investment or some cash back, have definitely run into some problems with liquidity and have short-term issues. Okay. Any questions on 5? Okay, did the company have to use long-term financing to pay its current liabilities? So, like you to evaluate that cash flows and answer that question, number 6. I only have one brave soul who answered so far. You're looking at number 6. Anybody else gonna answer? Okay, we'll move forward then. Did the company have to use long-term financing to pay its current liabilities? The answer is no. Net cash provided by operating activities covered current liabilities. Now, they do have a small net positive from borrowing, but they didn't really need it. And you can see overall in financing, they paid out more likely than not. That excess went to buying common stock. Okay. Okay. All right, number 7, is cash from operating activities considered favorable or unfavorable? I think that's pretty straightforward now that we've gotten through here. Favorable. All right. So here, I mean, the number is pretty obvious. Capital expenditures is an outflow of 3,948,000. But what they want to know is, what are capital expenditures? What are they spending that money on? And capital expenditures are expenditures on non-current assets like property, plant, and equipment. These assets are expected to produce income in the future. So these are growth investments. Okay. So now we move to number 9, is the company expanding or contracting? And so it's expanding. It has cash outflows for capital expenditures. Sorry, it has net cash outflows for capital expenditures and business acquisition. So they're growing. All right, any questions so far? Okay. Try to keep this on the same page here so we can look at it. All right. Do you expect the company's depreciation expense to be more or less in the next year? So type your answer to number 10 in the chat box. And yes or no is not the correct answer here. Has to be more or less. Okay. So it says, do you expect it to be more or less? And I expect it to be more, and that net cash outflows for capital expenditures exceeds the sale of PP and E. So we'd expect that these capital expenditures will be depreciated going forward and will increase their depreciation. Do you expect the company's interest expense to be more or less for next year? Type your answer in the chat. It's not yes or no, it's more or less. Not getting as many answers on this one. What causes interest expense? Think about it that way. And then see if we have more or less of that. Okay, so interest expense is driven by debt, and the cash flow shows a net increase in long-term debt. So there should be more interest expense next year. 995 inflow versus 510 outflow. Did the company issue any common stock during the year? You guys should answer number 12. Type your answer in the chat. This one's interesting. Interesting. So we would find common stock, and we did have sale of common stock of 285. So yes, 285. Did the company pay a dividend to its owners? And we find that cash dividends paid to shareholders, 719. And so yes, 719. Any questions on any of the parts of number 16? Okay. Now I went through on the last class, but I didn't get to do a live class with you, but I had posted the video on Blackboard for you. So hopefully you had a chance to look at it. And then I recommended you do some follow-up questions. Now I've included the answers to those follow-up questions here. And just wanted to ask if there were any questions. I didn't do 9:15 because I still want you guys to practice that one, but I did do the calculation questions, and I tried to detail out how I got the answers. But if anybody has any questions on those questions that they were supposed to work on, be more than happy to help. Otherwise, they'll be posted with our notes for today. And that's it for today. On Monday, it'll be kind of an open review session for chapters 6 through 9. If you have questions, I'll be there to help. I can answer questions on the homeworks, the classwork, on our notes in class, anything that you see in the text. And hopefully we'll get back today with the exam 3 study guide, and I can answer questions about that. If you don't have any questions, you're free to go. And if you do, I'll be here. Have a good day.